You're listening to AI Prism from Seoul Economic Daily.
It's Monday, July 6. Here's why global investors are paying attention to Korea today.
Yeah, it is a massive week for the markets there.
It really is. I mean, we're watching this rare collision of historic earnings, shifting currencies, and global macro policy all converging right now.
Right, like all hitting at the exact same time.
Exactly. So our mission for this deep dive is to unpack these 5 major catalyst events. We need to see if the infamous Korea discount is finally narrowing. You know, that lingering issue where Korean companies are just structurally undervalued compared to global peers.
Well, looking at the data, institutional capital is already aggressively positioning itself before these events even unfold.
Wait, like how aggressively?
Very. If you look at the numbers out of Hong Kong, CSOP's 2x SK Hynix leverage ETF just accumulated $16.8 billion in AUM.
Oh, wow. $16.8 billion.
Yeah. It actually overtook the tracker fund of Hong Kong, which sits at $16.2 billion. So it's now the world's largest single-stock leveraged ETF.
That is just wild. So institutional capital is actively front-running the data here.
Oh, absolutely. But it's also about structural access changing, right? Like today is the official launch of the 24/7 Seoul foreign exchange market.
Right. Technically, you can trade the Korean won against the US dollar around the clock now.
Yeah.
But, okay, let's unpack this. Opening the currency market 24/7 without adding actual overnight liquidity is like opening a 24-hour drive-through, but only staffing the kitchen during the day.
That is a perfect way to put it. You can leave the window open at 3 a.m., but if nobody is cooking the fries, you're not getting fed.
Right. Access doesn't just automatically equal liquidity.
Exactly. And the source data validates this completely. We see that 77.3% of KRW-USD trading remains heavily concentrated in Seoul daytime hours.
So expanded hours alone won't instantly fix that structural bottleneck.
No, not without accompanying liquidity reforms.
Which makes sense. But you have to connect that FX shift to the actual engine driving all this capital, right? I mean, Korea's semiconductor
Well,
park.
tech engine is absolutely roaring right now.
It really is. That boom generated a current account surplus of more than $100 billion just through April. And tomorrow, July 7, we get Samsung's Q2 preliminary results.
And the consensus there is just huge.
Yeah, a record 90 trillion won consensus, which is roughly $62 billion.
And you know, it's not just the tech earnings driving this. The whole macro environment is shifting to support it.
Right. Wednesday's a big day, too.
It is. This Wednesday, July 8th, the IMF releases its World Economic Outlook. Korea's GDP growth is widely expected to rise materially from their previous 1.9% forecast.
Bumping up to align with the Bank of Korea and the OECD at 2.6%, right?
Yeah, or even hitting 4%, according to some foreign research houses.
4% would be massive. And objectively, we also have to look at the downstream U.S. catalysts later this year without, taking any political sides.
Right, the regulatory rollbacks.
Exactly. The Trump administration's proposed rollback of 702 regulations is projected to save $1.5 trillion in compliance.
That's a massive amount of freed up capital.
Huge capital. And potentially accelerating U.S. data center capex, which, of course, just explodes the demand for Korean HBM memory.
The fact that the Hong Kong ETF managed to capture a massive $16.8 billion in AUM proves institutional capital is actively front-running this week's catalysts. This rapid convergence of KRW-USD currency reform and record earnings is the strongest signal yet that the historic Korea discount is genuinely narrowing. Without making any buy or sell calls on the KOSPI, watching the dollar-denominated SK Hynix ADR launch on Friday will perfectly measure real-time foreign conviction.
It really will be the ultimate test of conviction this week. Which brings up one final provocative thought to leave you with. With Korea's domestic ETF market now hitting 500 trillion won, or about $345 billion, it's becoming a genuine global testbed. So is this week's data surge the start of a permanent structural evolution for Korea, or is it just a temporary semiconductor supercycle masking older governance issues?
Definitely something to chew on as the numbers roll in.
You've been listening to AI Prism from Seoul Economic Daily.